How many people here are believers that the next president of the United States is going to be Donald Trump? Anybody? Okay. How many people are afraid it might be Donald Trump? Okay. How many people think the United States economy is going to go into recession next year? Anybody? How many think Canada is going to go into recession next year? Okay. How many people think your taxes are going to go up next year? Okay. Okay. How many people think the best days of the Western economies, United States, Canada, and Western Europe, are ahead of us? How many think the worst days are ahead of us? Okay. All right, well, let me do this. Here's what I'd like to do. I'd like to talk about three subjects, if I could. Let me talk about a little bit how I got into private equity, because it's a little bit of an unusual story. Talk a little bit about the US election, and talk about where I think the private equity world's going. So on the US election, let me just deal with that first. So my background is such that you'll hear in a moment, I worked in the White House as a young man. And so I have some background in politics and government. And I don't get involved in politics now. I'm not supporting either candidate. But I think it's very, very unlikely that Hillary Clinton can lose this election. Despite what happened recently, I don't think that many votes are likely to be changed. She's not a strong candidate. She obviously had the email problem. She's got the foundation problem. She's got the WikiLeaks problem. She's not an exciting candidate. Bernie Sanders almost beat her in the primary. She can't appeal to young people. She's not young. She's, the oldest person we ever had as president of the United States the first time was Ronald Reagan. She'll be the same age as Ronald Reagan was when elected. So she's got a lot of challenges, and she's been around a long, long time, and it's not like a fresh face. On the other hand, it's very difficult for a Democrat running for president of the United States today to lose. The reason is the Electoral College has moved dramatically in favor of the Democrats because of the way it works. So if you take all the states that have voted Democratic in presidential campaigns the last 6 elections in a row, 6 consecutive elections, you would get 242 out of the 270 votes. So if any of you became an American tomorrow and you were the Democratic nominee for president, you're going to get 242 votes out of the 270, because these states are so Democratic now. So think about this. When John Kennedy was running for president in 1960, he wasn't sure he could win New York State. He was campaigning in New York City 3 days before the election. He didn't know. In those days, we didn't know which way each state would go. Now we pretty much know. In fact, the last presidential election, when Mitt Romney lost to Barack Obama, there were only 7 states that mattered. And the other 43 states were known well in advance. So 83% of all the campaign election spending, advertising, almost $1 billion was spent in just 7 states, 83%. And about 53% was just spent in 3 states, Ohio, Florida, and Virginia. So we pretty much knew how every state was going to go, and that's pretty much how it is now. Even though you hear maybe Trump can win this state or maybe Hillary will lose this state, the truth is it's very unlikely there's going to be a big change in pattern. So Hillary has 242 votes in her hip pocket, in my view. If you take all the states that went Democratic the last 5 out of the 6 times, plus 6 out of the past 6 times, that gives Hillary 257 votes out of 270. You only need to pick up one more state that has 13 votes, and that's Virginia. So she's got a pretty good heads up on the Electoral College. Any of you, if you're a Democrat, run for president, would probably have it. Actually, she has a gigantic demographic advantage, and let me explain. When John Kennedy ran for president, 92% of the voters in the United States were white Caucasians. When my former boss ran, Jimmy Carter, in 1976, 89% of the voters were white Caucasians. Mitt Romney thought he was going to be president of the United States and had prepared a statement accepting the election last time because his pollster told him that 75% of the voters would be white. He was going to get 56% of the white vote and 66% of the white male vote. Well, he did get 66% of the white male vote and 56% of the white vote, but only 72% of the voters turned out to be white. There weren't enough white voters, and he lost to Barack Obama. This time, it's likely to be 68% of the voters will be white. So there just aren't enough white voters, and with Democrats getting probably 90% of the black vote and probably 80% or so of the Latino vote, I would say they probably get 80% of the Jewish American vote, probably Asian American vote, probably 75 to 25% Democratic. So it's a big electoral advantage for a Democrat right now. So that's why I think Hillary has a big advantage despite all the problems I mentioned. And then she's running against a candidate who's probably as weak a candidate as the Republicans could have nominated. I think many of the Republicans who ran, had they gotten the nomination, and they obviously didn't, but John Kasich probably would have won this election. I think Paul Ryan, while he didn't run, he probably could win the election. I think Mitt Romney, had he gotten in, could probably have won the election. Jeb Bush didn't do very well, but if he was a general election candidate, I think he could probably win. It's just that they happened to nominate a man who just was unusual. He is, I do know him, and he's a person who just doesn't really like to listen to conventional kind of thinking. He says many things that get him in trouble. Had he been the nominee of the party, as he was, and ran a conventional campaign, just stuck to the issues, didn't yell at anybody, didn't insult anybody, didn't get into any of these sex-related issues, I think he probably had a reasonable chance of winning. But I think today, it's just too far a bridge, I think, for Americans to go. And I think the polling data will show that. Earlier today in Washington, I interviewed 4 of the leading political people in the country for an Economic Club of Washington event. I'm the president of it, and it's on C-SPAN Live, and if you watch C-SPAN tonight, you'll probably see it. And they basically all believe that there's no way for Trump to really win unless some unbelievable change happens between now and election. And I think that's probably my view. You know, elections are not always predicted correctly by pollsters, as we saw in Brexit and we saw in the Scottish vote. And Cameron's re-election, people thought it was going to be close. So they're not always right, but the polling data in the United States now is pretty good, and there's so many different pollsters. I think it's unlikely the pollsters will be wrong. I think the biggest challenge is not whether Hillary Clinton will win the election. I think she will win, but the challenge is, can she govern effectively? Because it's one thing to win an election, everybody's happy when you win, but you have to now deal with problems that are very significant. And I think the Republicans in Congress, while I think the Senate may go Democratic, it still takes 60 votes to get something done in the Senate, so I don't think the Democrats will have an overwhelming majority, even if they get the majority, and the Republicans are almost certainly going to have the House. So you've got many people on the Republican side of the Congress who are saying, wait a second, she won the election because she was running against a very weak opponent who was very unusual. Had Kasich been the nominee, or Jeb Bush, or Paul Ryan, the Republicans would have won. So we don't really feel she's got a mandate, and therefore, why should we help her? Why should we do anything she wants? We can beat her in the midterm elections in 2 years. There's a lot of Democratic Senate seats up. We can win the control of the Senate again. And then in 4 years, Hillary Clinton would have to do something that hadn't been done since FDR, which is to have 4 consecutive terms of the same party. And that's very, very rare. So I think they will feel that they're not going to kind of give her very much, and it will be difficult for her to get things done. I would say her first priorities will probably be getting an infrastructure bill through, trying to fix the health care program that is not working perfectly, probably trying to do something on immigration reform, something relating to taxes, getting American companies to bring their taxes, their revenues back from offshore and pay some taxes on it. But I think it won't be easy to get a lot of these things done. So you're going to see a lot of the same skirmishing you've seen unfortunately, for the last couple of years. The American system is somewhat dysfunctional in many ways. And you think about it, when our country had 3 million Americans, and we were trying to take over Canada in those days too at some point, we had 3 million Americans. Half a million of those were slaves who couldn't vote, and 1.25 million of those 3 million Americans were women who weren't allowed to participate in government. So out of 1.25 million Americans in 1776, we produced George Washington, Thomas Jefferson, John Adams, James Madison, Benjamin Franklin, Alexander Hamilton. Now we have 330 million Americans. And we have produced what we produced. So where are the great leaders? Now, I think the great leaders have gone into private equity. That's where my view is with all the people are, but not everybody agrees with me. So let me talk about myself for a moment. Everybody's favorite subject is talking about themselves, so I guess it's probably true with me as well. I am not a natural born investor. I didn't really want to be making money. As you can probably tell from my last name or my looks, I'm Jewish. I grew up in a city in the United States which was the most rigidly segregated city in the United States by religion. Because although it was against the law in the United States as of 1948 to sell a house with a restrictive covenant, which meant restrictive covenants in the United States said, you can't sell this house to somebody who's black or Jewish or whatever it would be. And that was pretty common in the United States. In my city, Baltimore, those restrictive covenants were being honored even though they were against the law. So when I was growing up in the 1950s in Baltimore, I didn't know anybody that wasn't Jewish. I had to live in a Jewish suburb, a little part of shtetl, and I didn't know anybody that wasn't Jewish until I was 13. I thought everybody was Jewish. Then afterwards I realized virtually nobody's Jewish. But and if your last name is Rubenstein, you think the father might be a lawyer or a doctor, but my father dropped out of high school to go into World War II. He came back and met my mother, and they got married when he was 20, she was 17. I was born more than 9 months later. And I'm the only child of that union. My father worked in the post office, never made probably more than $7,000 a year. And so my goal in life was not to make money. It didn't inspire, it wasn't part of my genes. It was just to kind of get a better job than my father had and probably be a lawyer and go into government. So I got a full scholarship to go to law school. I didn't have very much money when I won the full scholarship. I was told you got the full scholarship, go to University of Chicago Law School, send in $50 and you get the scholarship, you know, when you show up, your registration fee, and then send another $50 in for housing. Well, I didn't really have an extra $50 in those days. This was 1969 or 70. So I said, I'll send in $50 for the housing, and surely they will tell the law school that I'm coming, because why would I need the housing if I'm not going to be in law school? Well, sure enough, I get there the first day and say, here I am, David Rubenstein, the full scholarship kid. And they said, well, you didn't send your $50. That scholarship went to somebody else. So, of course, the blood drains out of my face and my legal career is over. I said, wait a second. I gave you $50 for the housing. Why would I have done that if I wasn't coming? They said, that's a different department of the university. We never talked to those people. We didn't know anything about it. So finally, I cried enough, and they felt sorry. They didn't want me to make a scene in front of the law school. Everybody was getting upset. I was crying. So they gave me the scholarship. So recently, I gave them $30 million to make up for it as a scholarship. I went to practice law in New York City with a firm called Paul, Weiss, Rifkin, Wharton, and Garrison. It was an unusual law firm because it was half Jewish and half not Jewish. In those days, law firms either Jewish or not Jewish. I had been a summer associate at a very waspy firm, and you know, it was very unusual. I didn't feel as comfortable there, so I went to work at this firm. But I really went there because a man named Ted Sorensen was there. He was the brilliant speechwriter for John Kennedy. And I'd always been inspired by John Kennedy's inaugural address of saying, give back to the country. So I wanted to work for the man who had written that speech, and maybe some of his luster would rub off on me. He had worked in the White House as top advisor when he was 31. I practiced law with him for a while, and I said, you know, I can't wait to go to Washington. I told my colleagues that I'm going to leave the firm and go to Washington. They said that's a good idea because I wasn't that good a lawyer. I told my clients I was going to leave, and they kind of suggested, you're right, you're not that good a lawyer. So I did get a job, and ultimately I went to work in the campaign for a man who was running for President of the United States. His name was Jimmy Carter. I didn't really know him. I had never met him before. I just knew he was a peanut farmer. He was running for governor. He had been governor for one term of Georgia. I went to work for him. He was 33 points ahead of Gerald Ford in 1976 when I joined Carter's campaign, and he won by 1 point. So Carter often said, like, what was your contribution? I was way ahead before you joined, and now I barely won. But White House staffs are obviously not filled on merit. They're filled on who worked in the campaign. I worked in the campaign. I became the Deputy Domestic Policy Advisor to the President of the United States at the age of 27. I wasn't qualified for the job. Carter wasn't qualified for his job. I figured it wouldn't make a difference. Nobody was qualified. So one of my jobs was to fight inflation. I got it to 19%. Nobody's done it since. I've often told the Federal Reserve, if you have a problem with deflation, bring me in. I can get inflation up. So I thought we were going to win the re-election. I would be the senior domestic advisor in the second term. I would be at 31. I'd be the same age as Ted Sorensen was. And then all of a sudden, you know, a great thing happened to us. We were going to run against Ronald Reagan. I said, please let us run against him because he's an old man. He was 69. I'm now 67. I thought 69 was like 99. And I thought, how could a guy be in a wheelchair? He's 69 years old. How can he possibly be running against us? We're so much younger. Of course, now I realize he had some talents that Carter didn't have. He won the election. We lost. All of a sudden, all these people who said they were going to hire me wouldn't hire me. They told me, always, you want a job, call me up. Well, I called them the day after we lost the election, and none of them would hire me because they said, who wants a Carter White House aide? Who cares about the Carter White House? So I had to start my life all over again. I practiced law again in Washington. I wasn't very good at it again. And ultimately, I decided to set up the first private equity firm in Washington. And I did it because I read about a man named Bill Simon, who had been Secretary of Treasury in the Ford administration, and he did a leveraged buyout. I didn't know what it was, but here's what it was. The essence of it, when the newspaper said, he put in $1 million of his own money, he bought Gibson greeting cards, and he made on his $1 million, $80 million in 2.5 years. So I said, that is better than practicing law. I didn't know what a leveraged buyout was, so I kind of tried to help put a firm together, get some people who actually had finance experience. I ultimately got 3 people together in 1987, and I kind of told them I had money and we would do buyouts, whatever they were. And when they joined up, I told them I meant to say I was sorry, I didn't have the money, I was going to get the money. So it took me about 6 months to get $5 million, and that's all we had initially. Then we built it into a very large, one of the largest global private equity firms. And I started the firm at the right age because I read that entrepreneurs start their first businesses and maybe their last business between the age of 28 and 37. If you don't start a business between the age of 28 and 37, if you're an entrepreneur, you're probably never going to start one. And it was said to me, it was like a woman's biological time clock. If you don't reproduce by a certain age, you're not going to be able to reproduce when you're 50 or 60. If you don't start a entrepreneurial venture by the time you're 40 or 50, you're almost certainly never going to do it. So I read that when I was 37, and that's when I started Carlyle. When I was 54, I read that a white Jewish male who turns 54 probably has lived on average about 2/3 of his actuarial life. And I realized, because Forbes had written articles about my net worth, that I probably had more money than I could possibly spend sensibly. And so I decided I would give away my money. Bill Gates called me and he said, would you sign the giving pledge? And I became the only person in the private equity world to do so initially. There were 40 of us initially. And now I've resolved to give away all my money for lots of reasons. One is I want to give back to my country for the great fortune I've had for getting lucky and kind of make payments back to my country. And that's one reason. One is I've also observed that philanthropists live a long life. You know, John D. Rockefeller lived to 97, David Rockefeller is 101. And so I have a theory that if you give away money, you feel happy about yourself, and happy people live longer. And so in the theory that I will live longer, I'm giving away my money because I'm happy. And I also have a theory that there's a special place in heaven reserved for philanthropists. I can't prove it, but I don't want to take a chance that I'm wrong. So I give away money to lots of different causes, and I'm basically in the process of giving away all my money now. But one of the things I like to do is remind Americans of their historic heritage. And so I buy historic documents like the Magna Carta. I'm the only private person in the world who owns a copy of the Magna Carta. I didn't realize you could do it until it was available, and it's now in the National Archives. And Declaration of Independence, Emancipation Proclamation. I buy these things and put them on display so Americans can learn more about our history, because we know very little about it. About 2/3 of Americans cannot name the 3 branches of government. And only about 50% of Americans can actually name the Vice President of the United States. And more high school sophomores can name the names of the 3 Stooges than the names of any of the founding fathers. So I try to get Americans to learn a little bit more about it, and it's one of the things I'm trying to do. So let me switch to another subject, which is private equity. I built this large private equity firm with the help of a lot of people. It's a global firm. It's one of the largest firms. We've got a track record of investing, at about 27% gross internal rate of return for about $110 billion of equity over about the 30 years. So it's a very good track record. It's a global firm, and we invest all over the world. And let me tell you what's going on in private equity right now. Essentially, returns are coming down from where they've been historically. They're coming down because there's so much competition. When I started Carlyle, there were only 250 private equity firms in the world. Today, there's 6,555. So when I started Carlyle, there was probably a few billion dollars committed to private equity. Now there's $4.5 trillion. So it's a lot of money, and obviously this money bids up prices. That's one factor. A second factor is that prices are very high to begin with because of either low interest rates or asset bubbles. Prices are very high. People are flush with a lot of cash. They don't need to sell, so prices are high. And despite the fact that prices are high and deals are getting done relatively infrequently, money is rushing into the private equity world. And why is that? Because if you look across the investment span, people realize that everything else has produced so much lower rates of return over the last 5, 10, 15, and 20 years than private equity. Private equity has dramatically outperformed every other asset class. If you compare the average public equity returns in Europe, United States, or in Asia, over the last, I'd say 5, 10, 15, and 20 years, the average public equity returns will probably be on average about 700 to 800 basis points lower than the average private equity return for a comparable period of time. And obviously, if you're fortunate enough to be in a top quartile private equity firm, you're going to do much better. So people are giving us enormous amounts of money, and there are 2 types of people that are dramatically coming in with money now. It used to be the biggest source of our capital was public pension funds in the United States, CalPERS, CalSTRS. It's a gigantic source of capital. It was the Carter administration which actually allowed public pension funds to actually go into private equity. Before 1978, it was thought to be not prudent. But once they came in droves, because they had the problem that you don't really quite have here. In the United States, we have state politicians who like to say to people, become a teacher, a fireman, a policeman, and you're going to get a modest salary, but you're going to get a great pension and for the rest of your life. But they don't really fund it, so they promise benefits here, they fund it here, and then they say to the investment professionals, see that gap? Well, you make it up. And how do you make it up? We'll go into things that are high return, go into private equity or something. So a lot of money went into private equity, and it's been pretty attractive for these public pension funds. But now they are being surpassed as the biggest source of capital by 2 others. One is sovereign wealth funds, or the national pension fund equivalent, so Canadian Pension Plan, equivalent, or a national pension service in Korea, or the sovereign wealth funds. In 2003, there was roughly $1 trillion in sovereign wealth funds around the world, $1 trillion. Now, in 2020, it's projected to be $9 trillion. It's the biggest source of capital in the world. And as you probably have all read, Saudi Aramco is likely to go public, and Saudi Aramco all the assets from that will then go into the Saudi new sovereign wealth fund, which will have, therefore, $2.5 trillion of assets in one fund. So it's a lot of money to invest, and they're coming to people like us and saying, we don't want us to go into your fund and give you $50 million or $100 million, and we're always grateful for that. But they say, we'll give you $1 billion, $2 billion, $5 billion in a separate account. So you're seeing enormous amounts of money coming in there. And also, the other big new capital source is family offices. Private equity started in the mid-'60s in the United States with large families like the Rockefellers, the Hillmans, the Whitneys, giving money to people who were starting venture capital firms and later buyout firms, and they were the big source of capital for a while. Now, family offices have been pushed aside by the public pension funds, and even the sovereign wealth funds and banks and insurance companies. But now, so many people have created family offices that it's a gigantic growth business, and now the family offices have the highest percentage of their money in private equity of any asset class. In other words, of any potential investor. So the average family office of any size that's measured now has roughly 25% or more of their assets in private equity. And they intend, apparently, according to surveys, to increase it because they don't tend to need the liquidity, and they tend to think that the rates of return are pretty good. They're also cognizant of the fact that now the way private equity works, you have a chance to co-invest. You don't pay any fees or carries on the co-investment. So if you can go into a fund that's reasonably good and you'll get co-investment opportunities, it can lower your fees and your costs, and you can put more money to work. So you see enormous amounts of family offices. I used to kid people that in the United States, you used to raise your child and say, I hope you grow up to be president of the United States. Now everybody in the United States says to their child, I hope you grow up to have a family office. Because everybody wants to have a family office because, it's a sign of success if you have your own family office. And there's a proliferation of them, not just in the United States, but around the world. And family office investors generally tend to be reasonably sophisticated. They tend to know what they want, and they can tend to afford greater illiquidity for a while, and therefore private equity is pretty appealing to them. And I suspect it will continue to be. So let me switch to my final subject, and then I'll be done. What is going to happen in the U.S. economy and the global economy over the next year or so? Well, obviously, if I truly knew, I'd be a lot smarter than I am, and nobody really knows. But here's what I think is likely to happen. And there are two big questions that really people ask about the global economy, and let me address them. One, when will the Federal Reserve in the United States increase interest rates, and what will be the impact? And two, why is growth so low in the post-Great Recession in Western Europe, Canada, United States? Let me address the first question. I think the Federal Reserve basically felt years ago that they had to help bail out the U.S. economy by keeping interest rates very low, quantitative easing and very low interest rates, because the Congress of the United States was somewhat dysfunctional, wasn't going to really do a lot of stimulus, and they were concerned about the deficit legitimately. So the Federal Reserve under Ben Bernanke and then under Janet Yellen said, we've got to keep interest rates low to keep the economy stimulated. Well, I'd say maybe 2 years ago or so, the Fed realized that asset prices are pretty high, maybe because interest rates are so low, and they've got to start a process of getting asset prices in a more normal range and begin to increase interest rates. But every time they got ready to do so, the economy slowed down, there was a problem with jobs, people was concerned that we'd have higher unemployment, and so they never really did much. And so far, since they have announced their intention about 1.5 years ago to increase interest rates, they've only done it once for 25 basis points. I suspect in December, you'll see an increase of 25 or 50 basis points. The economy seems a little bit stronger, and it's after the election. I don't think they were going to do it before the election. Then what will they do next year? Remember, 25 basis points, even 50 basis points is still modest. I think you're going to have to see interest rates go up by a fair bit before you have the ability to really help stimulate the economy if we go into a recession. Right now, if the U.S. economy slows down and Canada slows down, interest rates are so low, you can't really lower them enough to really help very much. And that is a problem. That's why I think they really want to push to get it up, but I don't think it's going to be done so quickly. So there is a bit of a problem that interest rates are low, and you can't really lower them much more and stimulate the economy. So they hope at the Federal Reserve they can get interest rates up to the point where if the economy does slow down, they are high enough so that lowering will have an impact. The problem is that we haven't had a recession for 7.5 years. We have recessions on average in the United States every 7 years, and since World War II, and the last one ended more than 7 years ago, and so we're kind of 7.5 years into it. We could go 8 years, we could go 8.5 years, but not likely to go forever without a recession. And we have another problem that the Congress of the United States doesn't probably want to spend a lot of money, increase the deficit. There's a big fight over cutting taxes, and if Hillary Clinton is president, I'm not sure the Republicans will say, let's help Hillary Clinton deal with her recession problem. I think they'd rather say, if there's a recession, let's blame it on her, and therefore we won't probably do a lot to cut taxes, be my guess, or increase spending. So I think you may have, if we have an economic slowdown in the United States, probably the federal government, because the Fed can't do much, Congress won't do much, probably it may drift for a couple more quarters than might otherwise be the case. So I think it's inevitable we'll probably have some slowdown. I think for the investing world, that's probably not a bad thing, because it will lower prices, asset price will be lower, there'll be a lot of bargains. The best investments are always made in private equity when the economy's in some disequilibrium. So while I have a lot of companies that we own and we don't want them to go down in value, and we want to sell them at good prices, the truth is investing in a lower economic environment is probably not a bad thing. I do think that Europe will probably follow what the United States does. If we go into some kind of slowdown, I think Europe probably would have some kind of similar slowdown. Brexit hasn't yet produced that slowdown, but at some point I think Europe will probably slow down as well. So overall, I think the U.S. economy is in reasonable shape today, but one issue we haven't been able to figure out, and I'll finish with this comment, is why is growth so low? After a recession, typically, you have 3 to 4% growth. Since the Great Recession, the United States has not grown at 3 or 4%. In no single year of President Obama's administration have we grown at 3% or 4%. Why is that? Well, you could argue the recession was so deep that recovering from it has just taken a longer time. That's one argument. But I think another argument will be, and I think it's more fair to make this argument, one, the economy is so large now. We're a $20 trillion economy. It's hard to grow a $20 trillion economy at 4 and 5% because of the law of size. Secondly, we don't have enough people in the workforce. Historically, 66% of adult males and females were in the workforce in the United States. Now it's about 62%. And that's because younger people are going to college more, or going to graduate school because they can't get jobs, and older people are retiring earlier. We also have a very big aging problem. Not as big as Japan's. Japan has 23% of their population over 65. We have 13.5% of our population over 65, and every single day, 10,000 baby boomers are turning 65. So if you have more and more people retiring and they're living longer, in 1900, the average life expectancy for an American male born in the United States was 49. Today, it's probably 80, 81 or 82. So you have people living longer. Our social programs are designed for people to live a lot less longer. When Social Security was set up in the 1930s, average life expectancy was around 65, and so you got your benefits at 65, so they didn't have to pay out as much. Now, people are living to 85, you don't have enough money, so there's a problem that has to be dealt with, and I think it's unlikely we're going to see 3 and 4% growth on a sustained basis. I think we probably have to get used to lower growth, and I think the same is true in Europe and probably Canada as well. I just think it's harder to grow with fewer people working and with the size of these economies that stimulate them to get to the point of 3 or 4% growth. I hope I'm wrong, but I think 2% growth is still not terrible. It does have some advantages, but in the end, I'm not sure we're going to get the gigantic growth anytime soon. So let me end there by saying that I hope all of you will not be disappointed with the U.S. elections. I think the President of the United States, I believe, will be Hillary Clinton. I think she'll have a responsible economic policy and responsible foreign policy. I think she will try to do many of the things that President Obama worked on as well. She has different views on many things that he did and does, but I think she'll be largely following a lot of the things that he did. And if there's any doubt that she will be elected, here's the standard, and you can watch it from this. The last time the Chicago Cubs won the World Series was 1908. Now, what else happened in 1908? Well, a man named William Howard Taft was elected President of the United States. He had been a foreign policy cabinet officer, Secretary of War, under Teddy Roosevelt's administration. Teddy Roosevelt served 2 consecutive terms as a Republican. He was followed by a 3rd consecutive term as a Republican, led by William Howard Taft, who had been his Secretary of War. So by that logic, if Hillary Clinton, who served as a Secretary of State in the Obama administration, she's the 3rd consecutive term. So if the Chicago Cubs win the 7th game, that will guarantee, in my view, that Hillary will win, because the same pattern will happen. It happens every 100 years or so. Thank you very much.